Well, if we can actually move past Brexit, and of course that is a big if in the current environment, and we start to think back to the fundamental story in the UK, which is still reasonably constructive. You look at those wage growth numbers yesterday, for example, 10-year highs, then I think you can see sterling moving into a much higher trading trajectory as markets focus back on the Bank of England process. So I think it is going to be the case that we are more likely than not to be trading in the mid-130s into the early part of next year. And I think in the context of a safe passage through Brexit. Now, of course, that is a big if, but if we can see that, then I think we can see sterling trading back into the 140 area on a 12-month view on the basis of the Bank of England probably looking to hike rates twice and markets being able to look through the Brexit problems. But it is very much a case of needing to look through the next month or so, and that is where there's going to be incredible degrees of volatility as investors continue to price in the probability of a deal being passed through Parliament.
And Jeremy, what if things go badly for the Prime Minister today? She sees 2, 3, 4 high-profile cabinet resignations. Do you think that could mean the end of her premiership? What does it do to sterling?
Well, of course, if there were to be high-profile resignations, and as you say, I think the markets would take some of those low-level cabinet ministers in its stride. But if you were to see one of those 4 big hitters who are integral to the Brexit process for the Prime Minister, if one or more of those were to resign, then I think you are going to be trading back towards those 127 lows. And I think that would then add to the risk of a breakup of the government. And then you would start to see certainly more downside pressure starting to play out. So I think it is very much a case of watching and waiting to see how the cabinet really play out through the course of today and trading accordingly. But certainly downside risks will be very evident if markets were starting to price in the probability of a May premiership starting to unravel.
Jeremy, I can't let you leave without at least a couple of moments here talking about the U.S. dollar. We are here in the U.S. on this set right now. We've seen a general trend of strength. Does it continue, and why?
Well, we have seen this very strong bias towards the US dollar. It is very much the case that, of course, the US is still the dominant factor in the global growth trajectory. And, of course, the Fed are still very much set fair on additional tightening. But I think the prospect of a moderation in both growth and Fed rate expectations into 2019 suggests that the uptrend in the dollar, I think, is pretty mature at this particular point. I think the euro is looking a little bit oversold as well, obviously Italian political risks notwithstanding. So I think it is a case that the dollar, once we start to move towards year-end considerations moving out of the way and liquidity constraints start to diminish, I think we will have an easier or a cheaper valuation of the dollar going through the course of 2019.